All right. Just one of the things I want to clear up right off the bat is I've had a few couple people private message me or email me today say, did you kind of figure we were going to have a big day today? That why you're that why you were pretty much long? And the answer is no. Sound? How about that? Sound better? All right. So, I had a couple of people. Did you think it was going to open positive or be this strong today? The answer is I had no earthly idea. What had me in long positions, obviously, was the morning star type signal, the bullish signal all the way up here. So I was already predominantly long. It wasn't like I was calculating that this was going to be something that would have a big day. The only thing now to watch for is this. Oh, cat. Still a cat for sale. This little downtrending channel. Some people would say, well, do you do it from the tops or do it from the body? It doesn't really matter. All you really want to see is this darn cat is sitting right here in front of me. Oh, man. Seeing what happens if so it doesn't really matter. It's just the fact that you're watching things that everybody else is watching. Yeah, but I saw. Yeah, it doesn't matter what made it go up. Yeah, so it wasn't a calculation that it was going to pop big because of any expectation of anything. This is what had us in the trade. Now the only thing to watch for is whether they can get through this area, which means with the doji, we definitely want to see it open positive tomorrow. If it opens lower, what can we kind of expect? We'll come back and down and test the 50, which means there's some profit taking. Now, does that mean the uptrend is over? Not in this case, because look what happened over here. Look where your stochastics were. Now look over here. Look where your stochastics are. It has the implication that there might still be some more upside. Oh, mercy sakes. Now the cat is chasing the cursor. Cat. All right, we're going to have a cat auction here pretty soon. Again. The NASDAQ. Also, right at some place that needs to be watched. Oh, pshaw. Got it right there. So it will be important to see what they do here. Now, even though the NASDAQ was up 111 points, which is strong, it showed there was selling after they opened it. But they were still off the bottom. So right now, we don't really have a firm grasp, but we can calculate what should happen based upon how things open tomorrow. If they open it lower, it's pretty much telling us that this resistance level and the 50 are acting as resistance after gapping up. So you might see a little bit of consolidation in here. Cat, drive me to drink. All right. These are days where you've got so many good charts out there that the question is, which ones do you go after? And that was kind of the point of this weekend's training, was to say, all right, if you can't analyze all of them and know what's going to happen, specialize in 3 or 4. These were recommended today. USX, because of the fry pan bottom doji sandwich. Now it opened positive and closed back where it opened. Let me make this bigger. But it's still the fry pan bottom trajectory, and your stochastics are not in the oversold area. Is there a date? Yes, I think it's December 15th. I've got to see whether it's going to be December 15th and 16th. There's a lot of information that is being that I'm accumulating for making your analysis of what option strategies to use. Oh, what was I saying? All right, so doji sandwich breaking this downward trajectory. ACRS, fry pan bottom with a doji sandwich. This one can still be bought. If you didn't buy it today, it can still be bought on positive trading tomorrow because you'll have a second doji sandwich. And notice what was making the bottom of this fry pan bottom. Spinning top, doji, 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 doji. When you see that many dojis and they start coming out the other direction, not only do you have a, good evening, Pat, not only do you have the probabilities that you're going to have an uptrend, but usually a fairly strong uptrend. What was the third one that we recommended? Oh, Aqua. Aqua, another fry pan bottom, followed by a doji sandwich, making your next likely target probably back up here at the 50, which would coincide with probably right here. Do you pay attention to how the candle closes, even though you are above the T line in an uptrend? Yeah, you want to see what type of strength. Obviously, we'll find one. Obviously, you want to see the bulls are still there. Now, as we see in this one's a little bit more tentative as far as the pattern is working. The selling was a little bit weak going into the close. So now you have a different analysis, which is, if this is a fry pan bottom type trajectory, you definitely want to see it trade positive or flat. If it opens lower, what's your first inclination? They're probably coming back to see if it's going to test the T-line. So you got 2 options. Either you can wait to see what happens when it gets here, or you close it out, see if it hits the T-line and bounces back up, and you can always buy back in. QCOM, we're going to go through the ones that we've been playing here recent. QCOM opened positive, but still in this fry pan bottom trajectory. And again, notice what happened down here at the bottom. Lots of indecision. Doji, 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 hammer, gap up, doji, bullish confirmation. Where's the likely target? Because you're not in the overbought area yet. Cat, stay away from that. Oh, man. Over here. Over here. Over here. There you go. Come over here. So we want to see this still open positive. What's the likely target? Kind of a little scoop handle. John, not necessarily. Because there's going to be a lot of stocks that are in good trends that sell off. During a good bullish day, and then there'll be lots of stocks that will act well when the market's just sitting flat. So the idea is the market in general is just kind of another facet of the information that everybody's seeing as they're making their decisions. So there's going to be days where the market stays flat, kind of a scoop pattern, but more of this fry pan bottom. So don't let the market be an indicator of whether things are good or bad. And I'm going to go back to this. This is still a good pattern, even though it closed here. For all we know, tomorrow it opens here and goes higher. And I will give you some examples of that. Let me get through the ones that we're trading right now and the reasons why we're trading. You can see what happened here on EXAS. Recommended this one because you started getting a bullish confirmation and then your doji sandwich breakout. Now you got a double doji sandwich breakout. So all you can do here is stay long. We are still owning ORBK because of the kicker type signal, giving us the strong start. Now, where are we? This is where you always want to use the logic of the candle or the Japanese rice traders. Where do most people buy when you start seeing the exuberance at the top? What's exuberance at the top? A big day or a gap up. So we held on to this. Obviously, we're sitting right here on the 200-day moving average. What would be a logical spot to tell us they're not going through the 200-day moving average? You put your safety stop right here because logic says if they open lower and they're able to come back down through here, you want to be out. What are the two pieces of evidence or warning to tell you want to do that? One, because they gapped up in an overbought condition, and two, they're sitting right here on the 200-day moving average. We can visually see if they start selling it off and come back down through this level, take your profits at that level. That means the worst case scenario is they bring it back down, do a bobble pattern. You can always buy it back if it starts back up again. Our TVTY still acting well. Observe the obvious. Doji, 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 right off the 200, left-right combo. You just stay long on this one. Now, you're up in the overbought area, so where do you put your safety stops? I'd have a safety stop just below today's low. It shouldn't come back down through there. All right, Krone was in the news today. You can see the fry pan bottom. You can see the breakout. Now, some people would say, well, it's broke out because there was a buy offer or a potential offer from one of the cigarette companies. We don't care what caused this. All we're saying is this is what's happening. So you got a fry pan bottom and breakout. It doesn't. Let's see. It's not that it did this pattern that we like it. It's doing this pattern because something out there is making everybody like it and creates the pattern. Now, after hours, it's trading up right about here. So this is back to your question. Do you pay attention to how the candle closes even though you're above the T line? Yes. What did this tell us? There was profit taking. Got almost up to 12. Now, if they open this positive and start taking it positive with stochastics coming up, fry pan bottom breakout, what's it basically telling us? If this profit taking's over, they're still taking it higher. Let's click here real quick. Yeah, right now it's trading at 1104, 1102, and it closed at 1017. What am I doing now? Oh, Jill. Whoops. Jill. Even though it wasn't very convincing, and look at the bullish flutter kicker signal. Then, what was yesterday? Friday. They backed it off. But what was the kind of the evidence that they weren't selling it off? They were just backing it off. took it back to the T-line and took it back up again. Today would have been a good day to be buying because of the bullish flutter kicker that's still confirming. KIRK, got to be watchful here. You're still coming up off the kicker signal, but what's our normal trading, trading criteria? If they come through a resistance level, they'll probably come back and test it. So if you're trading actively, if it opens lower tomorrow, you take some profits, and then you watch to see what happens once it gets back to the 200. If they bounce it back up, you can start buying back in again. That's Turk. And HMHC still acting well. Might have a possible selling, but you need more confirmation. All right, the biggies. First of all, Nugget was acting a little bit better today because I think gold prices were up pretty strong. Now, this is one of the factors or one of the aspects of, I'm going to come back to this later. This is one of the criteria for if part of your trading is trading with the sectors, or you're a little bit longer term trader, meaning my longer term was 1 week to 5 weeks. You can use the ETFs, but I'm going to come back to that. Labu, trading positive. You can either trade Labu, or you can go to the biotech sector and see which stocks are acting the best. AMD closed right at the 50, just climbing into the overbought area. So what's the common sense analysis here? If it opens lower, you probably want to take some profits. If it opens lower, you close it out. What's the worst case scenario? It turns around and starts coming back up. You can always buy it back. I would rather close it out and then give up 40 cents versus sitting here, watching it open lower, and giving up 40% of actual profits. I'd rather give up 40 cents of potential profit than 40 cents of actual profit. So the logic says if it opens lower tomorrow, you close it out. You can always buy it back on the next buy signal. But what makes this a strong signal? There's our best friend, a doji gap up. And where did it gap up? Right smack dab through that resistance level. Now, if it goes higher, what's the other pattern that is very bullish indication? Got a big island reversal. You can draw an island all the way around this without touching anything. That's usually a good, strong indicator that now you're going to see more upside. Amazon, where was the possible resistance level? Here and here. Notice what happened at this resistance level through the 50. Not only was it showing you that the resistance level was not acting as resistance, but they came down and actually used it as support. You can still be buying Amazon on positive trading, because what would that tell you? This breakout level is being broken out. And you still got probably a few more days as far as stochastics are concerned. NVIDIA, a little bullish engulfing. Yeah, a lot of these moved up today because of, obviously, the market being very strong. So what would be the next resistance on Amazon? Ew. Don't even know. So if I don't know, I stay long until I see a sell signal. Maybe there, and possibly up there. That's good. Netflix, took some profits on Netflix as it opened up and traded up, and I sold the rest of it. May have been a little bit too early, but it came all the way back down through yesterday's, or what is today? Monday. Friday's trading. So I closed out some here, some of the calls, closed out some here. So I got this average. May have been a little bit too early. Oh, I entered the trade down here because of the left-right combo gap up. And I entered right about in here because they opened it, they traded it down. But what did we already know about this reversal? There was a left-right combo. That and stochastic starting to come up. That was a good indication that there's been a reversal. So when it opened and traded off, didn't work. Oop, now coming back up through that level. As soon as it came through that level, what type of candle were you starting to see? Starting to see a green candle. If you see a green candle, what's that telling you? The bulls are there. And what do you expect after a left-right combo? The bulls to be there. So that was the place to be buying. Now, I bought some more the next day. Because when it pulled back, what did we already assume here? That we were in an uptrend. So when it came back down and hit the T-line, and started back up, what's the most reasonable thing to do? Pull up your 10-minute chart and see what it's doing on the 10-minute chart. So I bought some calls down here, and I bought some more calls right here. And so sold them out today and had a decent profit with them. John, hold on to your individual stocks until I tell Jim to do the double line. Apple traded better. It didn't look very good earlier, but now it looks better. The fact that when they opened it and traded down here wasn't showing a lot of strength. The fact that they closed it back up here where they opened it, doing a doji, makes this very simple. If it opens positive, your next target is going to be the 200-day moving average. Tesla, I will be buying calls on this one tomorrow if it opens positive. Because if it opens positive, what's it telling us? It's going to be trading positive. If it's trading positive, what type of pattern do we expect? A bullish doji sandwich, which means if this candle and this candle are the same, they're breaking out through this level. Yes. Oh, and we did Netflix. Okay. So there's lots of good-looking stocks out here. So how do we pick the best one? Well, you don't want to try to pick out the best ones on every single type of pattern. This is why we kind of tell people learn 4 or 5 very well. This, to me, is probably the best pattern out there. WHD. Inverted hammer, doji, inverted hammer, doji, 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 gap up. Kind of your cradle pattern. But what else do we have in this scenario? Our best friend signal, doji gap up. We got a doji gap up through the T-line, breaking this downward trend channel. After a series of dojis, the probabilities, yes, your best friend signal is there's a good possibility they could take it all the way back up here to the 200-day moving average or the 50-day moving average or higher. There's a wee little teeny gap right in here. Very, very teeny, but it's a gap. So just the fact that you had this series of dojis makes for a very good prospect of much higher. Crone, again, fry pan bottom breakout. We know what the reason is now, that there's going to apparently be some sort of offer on it, or they think it's going to be. So it doesn't matter what the reason is, we're seeing what investor sentiment is telling us. but they've come in and started buying this one pretty heavily. What made you stay in trade with options after the first red candle Netflix? Was it still, yeah, it was still above the T line. You're talking about this one right here. Yeah, if this opened here and traded down here, it was a red candle. But what did we already know? We knew the stochastics were heading up. We knew we had a left-right combo. We had a kind of a gap up day. We were above the T line. So what can we assume from this? Pretty much assume that we're back in an uptrend. So that means you can be a little bit more aggressive on a pullback, especially if you've got the mechanics of a pullback where you can see what's happening on the 10-minute chart, anticipating they're going to start taking it up again. Okay, there was Alta. Let me make this smaller. Well, for crying out loud, how can you keep getting that thing? There's kind of your little, got a red candle, there's your little kicker, a little kicker type signal. That major, but it's still a kicker type signal. And where is it occurring? In what looks like to be a J-hook pattern setup with stochastics coming up. So here's one that, especially if you're an option trader, you can be buying this one on positive trading. ARGX. There's your fry pan bottom. There's your best friend breakout. What do you expect from here? By that type of move in a 45 degree. Why would this have more upside? Because of the strength of your best friend signal, number one. Number two, because they broke out through a resistance level that would tell you wave 3 has now started. VCYT. Another one. Doji, hammer, gap up. Wave 1, wave 2, start looking for wave 3. STX. Get this bigger. Gap up. And where did it gap up? Through the 50. So what do you have basically setting up? Got your bobble breakout. Failed at the 50, pulled back, kind of hovered around the T-line area. Now they've gapped it back up through. What do you think your next trend is going to be? I'd say right up, got so many little lines on here. Right back up here to the 200-day moving average. All right. MLNX. I've kept this one because, again, look at your little doji best friend gap up through here. What do you think is happening now? Wave 1, wave 2, going into wave 3. This is probably going to be a recommendation in the options room tomorrow. And ESPR, bullish engulfing, T-line crunch. Where's your first likely target? Right here. If it goes through there, what do you got? Probably this type of magnitude to the upside. So there's stocks that are showing good movement, but there's still stocks that aren't out of the picture. Now again, I kind of closed out Netflix because it was trading down here when the market was still up 270 points today. It told me, maybe they're running out of steam after they hit the 34. So is this trend over? Maybe not. But why sit with something that has a little bit of doubt to it when there's probably going to be 20 stocks out there tonight that have excellent buy signals. When do you go with an options? Start of a large, whatever trading strategy you're using, as opposed to buying stock. Oh, because I might not be buying, what was the one? I probably, oops, this one wasn't it. But I might not be buying a $97 stock hoping that it's going to go up another, this magnitude, even though that would be decent, but the rate of return for my options would be that much greater. Now, on something like this, oops, that wasn't the one. Oh, man. There's a few stocks that, ACRS, that's probably got a decent rate of return, 20%. I could buy the options, but it's a $10 stock. I'd probably be buying the stock versus going after the options. Have to have a lot of meat on wave. Yeah, but remember, the reason that we're going after some of these that have good price moves is I might not want to pay $300 for a stock, but I might do a call spread, let's say at 20-30, where I'm putting in maybe $2.20 to make $10, or have it to go to $10. On hammer signals, how big is the upper wick? Now, hammer has a lower wick. And remember, the candlestick signals, whether it's a hammer, inverted hammer, shooting star, or hanging man, have a very simple rule. The wick or the tail is 2 times greater than the body. Okay, so one of the aspects, candlestick analysis, or how you want to trade, the type of trading program that you want to do, is maybe a little bit longer term. Crude oil popped up today. Oops, I can actually bring up crude oil here. Let's see. So you can see the crude oil we kind of were suspicious or suspected that we might see a reversal because it was trading flat, indecisive in the oversold area. This is what we were looking for, is that type of move. In this case, they gapped it up through the T line, and now after hours, they're still trading it up some more. So that is the stimulus for a sector. That's why when we were looking at Nugget, you can look at this and say, this might not be anything yet, but had this been a big, huge day, you would now say, I want to take a look at the gold stocks. Labu was up strong. That tells me if you hadn't started looking at the biotech stocks, you could have been doing it on these days and or this day. You might not want to trade Labu, but at least it gives you the inclination to go look at the stocks in that category. Or not in that category, in that sector. So that's one way to identify where you might want to be buying. Now, on the other hand, if you saw something like this on an individual stock by itself, you might say, that might be good, but the rest of the stocks in that sector weren't acting well. I better be a little bit careful. But if you see this acting well, notice you've got a kicker signal after a series of dojis on Oasis. You've got a kicker signal on RIG after kind of a rounding bottom. LPI, a big Morningstar type signal in the oversold area. There's going to be about 6 more of these. Gush, Another one you could be buying. Doji, 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 doji. Gap up through the T-line. If this opens positive, you can start buying it. XOG. Closed right here on the T-line. Kind of a hammer gap up. Makes it very simple. If it opens positive, you can start buying this one. Now, look at all the ones in this sector. These are all oil stocks. WTI, spinning top right on the T-line, gap up, breaking this downtrend. Where's your likely target? We've probably got enough stochastics to get you through here, making up this the next target. So what should you be looking at if you're seeing a bunch of stocks in one sector moving up? Well, that's a pretty good indication that everybody is now buying that sector, which is a lot safer conclusion than if just one stock had been moving up. So if we know that they're buying the oil sector again, what's our next criteria? Which ones have the strongest charts and which ones have the best upside potential? Go through it real quick. So if I bought Devon on positive trading with the anticipation it's coming back up here, all right, 5 points on a $28 stock, I should be able to figure this out. That's probably about a, I can't figure it out, probably about a 25% upside. Bass, if I'm buying this one, there's your left-right combo. Now it's confirming. Where could it move to? Back up to the 50. 2 points on a $6 stock, a $6.50 stock. It looks like about a 30% upside. SD, gap up, closed right at the 50. If they open positive, what do you got going on? There's your bobble breakout. There's your fry pan bottom. Where's your next likely target? The 200. So if it moves up 3.5 points, there's a 35% upside. So because we can see that everybody is buying into that sector, I don't even know what is this. Cactus, is this an oil-related stock? I think it is. You can calculate, all right, what's our upside potential? Now, if you're buying something where you're looking at something, there's ExxonMobil. It's had a nice strong run ever since the kicker signal. But if it has another strong run, all right, you might make 6% on this trade. Whereas some of the other ones that are in the same sector, you might be looking at a 20% or a 30% upside. So because you've got so many stocks in one sector that are acting well, now at least you have the opportunity to go back and say, all right, which one do I want to buy in this sector? What's the upside potential? I've got a lot of stocks that have 20, 25% upside potential. This one I like the best because of all the dojis and the gap up. That's pretty much telling me they're going back to the 50. But I'd have to go back through. This one, I think, looked pretty good too. ENLC, bunch of dojis, doji gap up. More than likely coming up here because I think, no, that isn't a gap, but that's still likely the 50-day moving average, the target. So the two parameters that I look at is which ones have the strongest reversal signals and which ones have the best upside potential. And it doesn't take very much WHD, no, because of the stochastics. yes, your stochastics are right here. That means the 200 is probably not going to be any relevance. The stochastics are probably going to run out of steam as you get closer to here. Now, that may not be the case. Stochastics may only be here when they get to the 50. That means your next target would be that little teeny gap. So that's what you watch to see. Is DNR a oil? Yeah, that's if you're trading the small price stocks. Yes, you've got. If this goes from 238 to 420, there's about an 80% upside potential. Now make sure. I'm going to try this right here because I can get to it quicker. I forgot what it was. Okay. What was that? DNR. Traded 15 million shares. Yes, so you don't have any problems with the. Now, something like that. No, that's not what I want to do. Something like that, DNR. That's probably a better way to trade something because I'm willing to go pay $2, $5, $7, $10, $15 for an option, which has a time frame to it. This one you can buy and not have to worry about a time frame because this is your likely target, which would be pretty close to probably an 80, 85% upside because those being the targets, and there's a gap right there. So you don't have to worry about the time element. So anyways, you can go back through and analyze each one of these and say which ones have the biggest upside potential before running into a major resistance level. The other ones you're looking at is the patterns. Fry pan bottom coming out on LSCC. If it breaks through here, it's going to come up, fill the gap, hit the 50. If it breaks through there, you got lots of running room. This is why you always want to know what the results are of patterns. There's a fry pan bottom on IOVA. If this starts breaking out, where do you think it's heading to? Up here, giving you about a 25, 30% upside. VICR, fry pan bottom. If it opens positive, at least you know you got running room to the next resistance level, the 200. But notice what they did today. There's your inverted hammer, your doji sandwich, your gap up to a resistance level, and your stochastics still have a lot of room to the upside. That's the type that gives you these big price moves. And DNE, if this opens positive, where do you think your next target is? Up here to the probably the 50, fill in the gap, giving you some running room. Why is this viable? Because you can see the setup. You can see all the setups. 1, you got a fry pan bottom. 2, you got a doji gap up. 3, you've got a doji. So if it opens positive, which way do you think it's going? It's continuing. So you've got every aspect of analysis of what happens in human nature to kind of confirm what's going on in each price. Fry pan bottom on DCPH. Whether you want to call it a T-line crunch or a fry pan bottom, you're still moving to the upside. Let's see, was this PS? Yes. Another one. Notice what happened right here at the resistance level. This is why knowing the individual signals. There's your doji sandwich, fry pan bottom breakout. Doji still got a lot of running room to the upside. Did I do Vetco? Vetco, right smack dab. I think we did this. Where was this one? Anyways, right here at the 50, if it opens positive, breaking out of this fry pan bottom, lots of upside potential. So, again, the reason we are kind of professing to learn a few patterns very well is on a day like this, there's probably 60 good chart patterns out there. Well, if you're trying to look at all of them, yeah, it's going to be very confusing. If you're getting very adept at trading fry pan bottoms, you know exactly what should be happening at these specific levels. In this case, there's your fry pan bottom breakout off the 50. Where do you think your next target should be? So once you learn each signal very well, or each pattern very well, now you know exactly when to be buying, when to be back out of a bad trade, staying in a trade, and then looking for a sell signal. Now you don't have to depend on anybody else to give you their opinion or their analysis. This is not rocket science. This is just taking the graphics of human nature and applying them because of the probabilities that human nature does as far as creating patterns and price movements. Another doji sandwich gap up on CNXG. If you want to be buying the mining stocks, there's your fry pan bottom breakout. Where did it break out? Right through that level. Where's your next likely target? The 200. Chem. Just seeing if everybody's awake. DR, yeah, ask that when we do the double line. What type of signal or pattern do we have right here? J-hook, all right. What type of kicker, Rob? No doji, well, you got a doji gap up down here, but what do we have right in here? Kind of a bullish trend kicker. Also, yeah, there's your bobble breakout. JP, you got it right on the nose. Got a kind of a bobble pattern with a trend kicker breakout. What are the probabilities now? Right, wave 1, wave 2, going into wave 3. Yep, good, all right. Bullish trend kicker. We did PS. So if I was just trading sectors and said, Labu is telling me the biotechs are being bought, now I can go through that sector pretty quick. Say, all right, which stocks look good? Well, there's a fry pan bottom breakout on FR or FPRX. That becomes viable. So at least Labu, being able to analyze that Labu is telling me the biosector is strong. Okay, there's a sector that I can be buying. Oh, I forget what was the sector, well, crude oil basically, because I trade it most every day. But the fact that crude oil reversed with and again, here is one of the things, one of those simple observations that will greatly improve your probabilities. Look what happened here. We were trading flat, trading flat, trading flat. What's that kind of tell us about the decisiveness of this trading? Very indecisive. Next, look at what was the last signal in this indecisive trading. The doji, yes. You got a flat trading indecisive stage, and the last day is a doji, which is your ultimate indecision, and then they gap it one way or the other. That pretty much tells you right away what their decision has been from that point. So this is why you're going to see probably a couple oil stocks being recommended. Not only because of their potential of a good, quick trade, but even on the longer term. Oh boy, so if you're a longer term holder, meaning you're not trying to trade every single day, probably the oil stocks are something to be looking at. Labu, something to be looking at. Which one was Chem? Chem. YS, a bullish trend kicker. Notice the trend has already started. And then they opened here and closed here. And where did they open today? They opened at or above the previous day's open and traded in this direction. So a kicker signal at the bottom as a reversal is a good strong, which one was it? Well, let's see. These are small kicker signals. This is kind of a trend kicker signal also because the trend started. But if you see a kicker signal at the very bottom, that's your true kicker signal. If the trend has already started, notice how RIG opened here and closed here on Friday. Then today they opened it above the previous day's open and went in this direction. Kirk, oh, thank you. Yes, that is one. Kirk opened here, closed here. The next day they opened it above the previous day's open and went this way. So from here to here, they gapped it up. That gap is right in the middle, or that gap is part of that signal. And what's this represent? A dramatic change of investor sentiment. LASR, a little bit more conservative, but what was the 50 telling us? It was acting as resistance. What did the day tell us? A doji gap up, best friend. If it opens positive, what do we got going on? A bobble breakout. ARNA. What do we got going on here? Kind of a J-hook pattern. If this opens positive tomorrow, what do you think the magnitude of this move will be? Right, the same magnitude as this move right here. So I don't look at anything too much on a short side, but if you wanted to have a short position in your portfolio, only for protection, so that if the market all of a sudden went south for some reason, look what happened today in Six Flags. The Stochastics in the overbought area, a bearish left-right combo, right smack dab at the 50, with a close below the T-line. What do you think the next target might be? Wave 1, wave 3 could bring you all the way down here. So this is why I say observe the obvious. The obvious is when they hit the 50, you produce a sell signal. That is a put option in the making, definitely, yes. So if I've got 10 positions on and we think the market is bullish, but we might see some selling, I might have 8 long positions, 2 short positions. Now, does that mean I'm hedging? No, because when I put those long positions on, it's because the charts are telling me I've got a high probability they're going to move along. Even if the market's moving up and I see something like this, and I decide to short it on weakness, even though the market's moving up, it's telling me this particular stock is not going up. I could still make money on the short side even if the market's acting strong. So it's not hedging, it's just so that you're not 100% trading in one direction or the other. Okay, that's about all I got for tonight. Are there any general questions on candlesticks? You're probably going to see this one as a short, recommended short. You're probably going to see this one as a recommended long because of this. And you might see this one over in the options room as a good options trade, that if this went from 70 to basically 100, this could take you up into about the 130 area. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Okay, EAM. Emerging markets, acting well. You can buy this one on positive trading. You can see the fry pan bottom. Now, again, this one's traded overseas quite a bit. That's why you see so much choppiness in it. Microsoft. Running into a little bit of problem. I don't like trading Microsoft because it's a slow mover. It wasn't a powerful breakout. So if you're long Microsoft, you definitely need to see this open positive tomorrow. If it opens lower, you're back into the trading range, which gives you a high suspicion that it's going to come back and test the moving average. HRTX, little doji sandwich, open positive. You stay long, but here's a case where you're starting to run out of stochastics. Wouldn't be unusual to see it move up here and then pull back to see if the 50 is going to act as support. So just be a little bit more cautious that your profit taking might be starting. Ford, that's a nice little bottoming action. You're not going to make a whole heck of a lot of money with Ford, but I've always had a great affinity to Ford because I still own a 1955 Thunderbird, built probably the 14th Thunderbird ever built. No. So remember, every price that you, or every stock that you get into is not going to go directly up. But you can, it's probably not your best looking chart, but it is all right. So the only thing you can do right now is stay long as it stays above the T line. Now, preferably, you want to see this open positive and start trading positive and break out through this level. Now, John, here's another little tidbit, that if I saw this and it gapped open up here and hit the 50, if it opened this close to the 50, I'd probably want to wait to see if they were going to get through the 50, just because I was already that close to it. I wouldn't be giving up too much by waiting to see if it traded up here and then going after it. CMB, decent looking chart. Lots of dojis, Morningstar signal, inverted hammer. You can be buying this one with the expectation they're coming up to fill the gap. Ross Stores. That one you can get ready to short, yes. I'll write that one down for a short. Because of the bearish engulfing signal. Now, you're in the oversold or just above the oversold area. So why would you get ready to short something that's in the oversold, close to the oversold area? Because what pattern is it setting up? Wave one, left-right combo brought you right back up to a major resistance level. If they start selling this off, what's your downside? A bearish J-hook pattern bringing you down into this area. SFIX, Another one that you can stay long, but you can see where it is. Obviously, right here at the beginning of the fry pan bottom type pattern, at the 50, just below the 200. So what do you need to see here? You definitely need to see this open positive and go through. If it opens lower, I'd close it out, but then I'd be ready to buy it if it ever came back up through the 50-day moving average. Right now, it's just telling you there's resistance right here, so you want to see what the open is. Long-legged doji, bullish confirmation. Be ready to buy this one on positive trading. GCO. Oh, let me make this smaller so I can get a better view of it. You've got kind of a Morningstar signal, but you also got this downtrend. So if you're buying this one, you got to be very conscious of this. So it does look like a J-hook type pattern. Just if you're buying, it needs to get through here, and you don't want to see it close back below the 50. AMBA. Kicker type of trend kicker. Notice it opened here, closed here, gapped up. Now you're right here, obviously, at the 200. So if it opens lower tomorrow and I was long, I'd take profits. I can always buy it back if it comes back up through the 200. AMP. Morningstar signal, bullish confirmation, wave 1, wave 2, you're in wave 3. You're not in the overbought area. But on each case, on a big day like this, my safety stops right here, just in case. 8. Another one is telling you what to do based upon today's doji. It has to open positive and trade positive. Even if it opens positive and trades positive, you put a stop back at the 200, because if it opens positive and comes back down through, you've got a bearish engulfing signal in a doji. If it opens lower tomorrow, you take profits and start watching to see if you're going to have a bobble pattern set up. AVYA. It's all right. The only way you'd be buying it, though, is on positive trading tomorrow. HMSY, nothing. You're right here at this resistance level. And then they failed. If this opened lower, I'd close it out. It's a chart that's telling you it's not going anywhere. If I was going to buy it, I'd want to see it come back up through this level and through that resistance level. And the reason I say there's nothing here, notice that this is not a signal. So there's a lack of a signal here, which means when it hits its first resistance level, there's usually not enough strength to get things moving. That's why the difference between an up move and a reversal, candlestick reversal, is dramatically different. It's the reversal signal has been identified for hundreds of years to tell you there's good strength there. If it's just an up move, not as a reversal signal, it's just an up move without any major force to it. Milam, oh mercy. Oops, hang on for 1 second. Okay, so Milam, nothing yet. I wouldn't be long or short. If I was planning to buy, it would be right here above these highs. But right now, it wouldn't be long or short. You can see there's no real powerful buy signals. Verizon, That's a bearish kicker, I would suspect. Now, so what do you got going on here? Got a bearish engulfing signal after a shooting star. They tried to bring it back up. Anytime you see them trying to bring it back up and they start selling it off, that means they're not going up anymore. They needed to break this level. Now you got a bearish kicker signal. That one you could probably be shorting on the basis that it's going to go back at least to your 50-day moving average. Starbucks. You can buy this one if it breaks out. You need to see positive trading. Just be aware that Starbucks, because it's now an institutional type trader, meaning the volume is so big, it's more of an option trade than it is a stock trade. Apple, this is more compelling if it opens positive tomorrow. Why? Because look where the low was today. Right smack dab on the T-line. And Tesla. Tesla, I'm going to be looking to buy calls tomorrow on positive trading on a bullish doji sandwich that should be breaking out through here, which means wave 1, wave 2, going into wave 3. BHC, you stay long. Doji, 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 bullish confirmation. Not sure, let me make this smaller. You can see what you've got going on here. Kind of a wedge type formation, which means your upside potential is here. You have to watch to see what it does once it gets there. Tiva, boy. If you're short, you stay short, but you can see that you're getting toward the oversold area and you're getting toward the 200. If this opened positive tomorrow, I'd cover short positions, but I wouldn't necessarily be going long unless you see a very, very strong buy signal. SRPT, excuse me, also needs to get up through the hold on. What was I saying? That was Cindy. Oh, this one needs to get up through the 50. So also you got to be aware of this. There's your downside resistance. SNH, that's a good looking little chart. Kind of a scoop type pattern, but there's your Morningstar signal. There's your doji sandwich, so that's your McMuffin. You can be a buyer of this one. TLRY, nothing. No direction. Yeah, just nothing there. We did Apple. Blue. This one you probably want to start thinking about going short. I wouldn't be long or short this one right now, unless it came back down through the day's low. Yeah, wouldn't be long or short. Whoops. This was the one I was looking for. This is a kicker signal. They gapped it down, and then notice when they closed it here, they gapped it back up. So at least you got a short-term prospect of it coming back up to the T-line. CVRR, remember yesterday when it did a bearish, or on Friday, it did a bearish engulfing in the oversold area. That means start watching for a buy signal. So if you've been short, I'd get ready to cover the short position on positive trading tomorrow. TAL, get ready to buy this on positive trading. Remember, it's going to move in the direction of how they open after a doji. Gap up if it opens positive. If I was going to buy tomorrow, I'd probably put a buy stop just above today's high. Let's see. INSG. Has this double topped from mid-September? Well, yeah, whether you want to call it. So I've noticed what it did today. It broke out, but came back down into the range. The Stochastic's rolling over, so it's not showing any strength. It's still showing kind of a wedge formation. So unless this opens positive, if you happen to be long, it has to open positive and trade positive, getting back up into this profit-taking area. Win broke out nicely. Look for a 45-degree. Home Depot. Not one of your best-looking charts, even though you've got a left-right combo. You've got some more upside, but it's not a you got a lot of overhead. Got to get through the 50. Got to get through the 200. And today, with it opening positive and trading back a little bit, yeah, it wouldn't be one of the best-looking charts or the best charts to be in right now. A bearish engulfing signal. Stochastic's heading down. And a bearish engulfing signal right here at a level that can be observed as being a resistance level. If you're long, I would have been out of it today. If it opens lower and you're still long, close it out. Intel broke out. Intel, you can be buying. It's an institutional trader. It's not going to make you a whole heck of a lot of money, but you've got a left-right combo. You broke out through the 200. At least a good option trade. AK Steel. Boy, I wouldn't be a buyer yet. It still needs to get back up above the T-line. Kevin, yes, I wouldn't be afraid to be buying them, but that's still going to be a function of where the markets open tomorrow. Now, if the markets open weaker, yeah, I'd be a little bit more, wait a little bit more. CNAT is trading at 543 up here. All right, so that might be a breakout, but again, look at your chart. That's a hard one to try to get a handle on. Oh, where am I? I don't know which calls. I'd probably be going out a couple weeks anyways. Yeah, that's something that you want to ask over in the options room. SYMC failing here at the 200. There's nothing here right now. It wouldn't be long or short. It needs to show you whether they're going up through or coming back down. Kim, you can stay long on this one. Got it broke out through this level. Oops, sorry. U.S. Steel. U.S. Steel, if I was short, I would have covered the short position. I wouldn't be going long just yet until you get above the T-line. All right, everybody. Watch your not gold stocks. Watch your crude oil stocks. Crude oil is up another 58 cents after hours. This is a good reversal. It's making these type of stocks good reversals. So more than likely, you're going to see a couple oil stocks recommended tonight. All right, everybody. Thank you for showing up. We'll see you bright and early in the morning. We'll see you then.